Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar faced additional downward pressure on Wednesday, primarily driven by the inflation data that surpassed expectations. The Australian dollar's inflation data that was released on Wednesday rose to 3.6% in the 12 months to April, up from 3.5% in March, exerting further downward pressure on the currency. A rebound in its rival currency, the US dollar index or the USDXY, also contributed to the decline for the Australian dollar. Nevertheless, finding support near the key level of 65.85 could see the market correct itself, and that is back towards the region of 66 to 67.40.45, which is a key area. Keep an eye on the RSI as the market is appearing to be shaping up to some divergence to the bull case, and along with that the 60-day moving average hovers just beneath and therefore should see the market, as I mentioned, rebound. The euro also took significant losses as the dollar index bounces from 104.60 up towards 105.15. It is viewed that the market may actually find a little bit of pressure in terms of seeing the US dollar sustaining or not around 105. The increase in the US dollar reflected on investors' uncertainty surrounding the timing and the extent of the potential interest rate cuts by the US Federal Reserve. However, we do have key data coming ahead. One is the GDP to be released on Thursday, and then also we've got Friday's April US personal consumption expenditure, or the PCE data. A key point that could see the US Federal Reserve shift its potential rate cut from September to August. Nevertheless, keep an eye on the data as it does play a key part in how we see the market going forward. Looking at the trend line for the euro, we can see 107.6080 is holding, and while intact, could see a correction and therefore see a rebound back towards 108 to 109, and the dollar index tumbling from 105 down to 103.5 as a potential target. But keep an eye on the data, as I mentioned. GDP tonight out of the US, and the Fed's preferred inflation gauge, the PCE, on Friday. Dollar yen was also a little bit to the mixed side this morning at the close of New York, and now wavers around 157. I still like to see a break, that is, of 156.40 to support the bear case. A little bit of a distance, but nevertheless, still keep an eye on that level as it would open the way down towards the region of 155.80, or still waiting for the broader call around 150.5 to 151. Profit taking accelerated in sterling overnight as the US dollar bounces and now finds the support close to that level of 126.40. A bounce from there is anticipated, and if so, could see a correction all the way back towards 128 and maybe onto 129, and with the broader call still looking up towards 130 to 131. Gold also suffered a significant downturn overnight and tumbled $20, and now close to its trigger level to support the bear case further, that is at 2,321 to 26. A break there would give further scope to the bearish case and look towards the broader call, which is around 2,250 to 60. Any upside attempts should find resistance as previous around 2,350 to 54. The topside call at $80 was rejected overnight for oil, and now backing away sees the market expected to fall further down to 77.70 and back towards the base, which is seen at 76.40.55. It would seem the previous bounce was a short-term correction, and now with the correction back to the bearish case, could see the market fall further. But keep an eye on these technicals. I would like to see a little bit more reinforcement to the bearish case, and therefore look to that target, as I mentioned, around 76.40 to 55. Well, that's a wrap. Thank you for joining me. And as always, look out the intraday report, and I hope you enjoy the great start to the day.